Hi students, we were discussing the statement of financial position or the balance sheet. So already we had discussed about the non-current assets and the current asset in the previous lecture. So we have almost 150,000 of what of the non-current assets after depreciation and after all the adjustments or all the considerations, and then we have almost 50,000 of the current assets. So the total asset is almost 200,000. So now we will move on to the capital and the liability, mean the other thing that if you remember we have a financial statement of financial position or the income statement, but the main focus is the basic accounting equation. So asset is equal to the liabilities and the capital. So the capital and the liabilities, if we total, it should be equal to the assets. Now we move into the capital. So what is the capital? Capital is simply an investment by the owner into the business. So that amount, because this business is running for last 5, 10, 15 years. So the capital, the opening capital at the start of this year means if it is a 31st December 2020, so it means the opening capital on the 1st of January 2020. So this is how much? This is 70,000. Mean the capital from the previous year what we are getting is 70,000 as the opening balance. Then any profit in the business will increase the capital. So obviously why we are doing the business? To earn the profit. So now if there is a profit, it will increase the capital because all the profit is for the owner, and we are talking again about the single owner. So all the profit will go to the capital of the owner. Now why we are doing the business? Because to earn the profit. So, and the businessman may be using some of the profit or all of the profit for his personal use. So this will be called as the drawing. So anything which he is taking out from the business for the personal use, so that will be considered as the drawing. So we have considered, let's say that this amount. From where we are getting this amount? So this is the amount of the profit of 50,000. So what is the source? Source of this is the income statement. So this is where this is the net profit, or what we say the net income. From where? From the income statement. So from the income statement we are getting the 50,000 amount, and income statement you can refer back to the previous lectures. We have calculated all the profit or loss or the income statement. The company has a profit or maybe have a loss. So they have the 50,000 of the profit is there. So we are adding it because it is increasing the capital. Then if there is any drawing, any amount which is used by the businessman or the owner for his personal use, so what we are doing, we are deducting it. So 70,000 was the opening capital on the 1st of January 2020. Then the business during the current year, from the income statement we have calculated that the profit is how much? The 50,000 is the profit, and then the drawing is how much? This is almost 10,000. So now the capital at the end of this year on the date 31st December 2020 is how much? This is 110,000. So this is the total capital or the net capital at the end of the year after all the adjustments. So there's a possibility obviously that the company or the business may have a loss. So if business has a loss, it will be deducted. So if there's a loss of 5,000, 10,000, 20,000, any amount, so that will be deducted, and drawings are also deducted. So we are considering here it's a profit, so we are adding or increasing in the capital. The next thing that we have is the concept of the liability. Just like assets, we have a non-current assets and the current asset, or a fixed asset or the current asset. In the same way, we have a liabilities. We have a two different type of the liabilities. What is the liability? Any amount that the business has to pay, so that will be liability. The business is liable to pay. Obviously, it may be they are buying the goods from the suppliers, so they haven't paid. They were taking the loan from the bank, or the owner has taken the loan from the friends or family. So any other amount, or still they have some expenses which are payable, like we have discussed the accrued payable in the previous lectures, or there is some unearned income which the income they have received, but still the services are not given. So for all that, what we have a liability. So any amount which is payable or which is due to the outsider by the business, so that is the liability. So current liabilities and the non-current liability. So in the non-current liabilities, again the rule is very simple. If it is above 1 year, above 1 year means what? That you have to pay the liability, but you have to pay this after 1 year. Means you don't have to pay it in the 2021, you have to pay it in the 2022, 23, 24, 25, so any year, but this is beyond 1 year. So the bank loan is there, for example 35,000 is there, which you have to pay, for example, after 5 years. In the same way, you have to pay like a 15,000 the lease. Okay, so the lease is where that the business is taking some asset, but not on the cash basis. They are taking on the lease, or what we simply say as in the installment form or any other option, so that the lease is there. So the lease rentals are paid, and we are talking about the finance lease. So 15,000 amount which they have to pay in the form of the lease payable. They may have taken some vehicle, or they may have taken some building or any furniture for next 5, 4, 10, 15 years. So this is on the installment, so they have to pay it, but in the next 5, 6, 10, any number of the years which is above more or more than 1 year. So they have a bank loan of 35,000, they have a lease payable of 15,000. So it means the non-current liabilities which is beyond 1 year, means which they have to pay after 1 year. So that is how much, if we get it total, so that is almost 50,000. So 50,000 is their non-current liability. Now we will move on to the current liability. So any liability which you have to pay in the next year, means the year is ending on 31st December 2020. So any amount which you have to pay during that 2021, means up to 31st December 2021. So that will be considered as the current liability. So we have an account payable or creditor. So account payable or creditor is simply anything which you have purchased, especially the goods you have purchased, the stock you have purchased, inventory you have to purchase. For that you have to pay, because you have purchased it from the suppliers, not on the cash basis, but we have purchased on the credit. So you may have to pay after 1 month, 2 months, 3 months, but maximum up to 1 year. So that is the creditors or the account payable. Just like account receivables, we have a control account. So this is also the control account. Why control account? Because you may have a more than one supplier, maybe 10, 20, 30, 40, 50 suppliers to whom you have to pay the money. So your creditors are more than one. So this is the total of all the suppliers to whom you have to pay. So the amount you have to pay is 18,000, maybe to 10 suppliers, 20 suppliers, 50 suppliers. So this is the control account. So you will not write every individual supplier name here in the statement of financial position. So what we have to do, we have to write a control, the total of that one in the control account. The next thing is the other payable. It may be for the expenses or any other thing you have purchased on the credit basis other than the inventory or the stock. So it may be any expenses payable. For example, you have received the electric bill, you have received the telephone bill, but still it is not paid or it is not due. You may have to pay it after 31st December, means this is the expense of current year, but you have to pay in the next year. The same thing we have discussed already in the accrued expenses. So you can refer back to that video also. So now the other payables, expenses payables are there, 12,000 is there, and then we have an unearned income. So any money or any income you have received, but still you have not given the service or rendered the service to the customer. So that is how much, that is 10,000. Again, the unearned income, we have done a small lecture on that one also, that is available in the videos. In the previous videos, you can check it out. So all these are the current liabilities. So we have a account payable or creditors, we have other payables, we have a unearned income. So if we total it, so it is how much? It is almost like 20, 30, like a 40,000. So 40,000 is what? 40,000 is the current liabilities. 50,000 is what? This is the non-current liability. So if we total it, so it is almost how much? 90,000. So 90,000 amount is the total liabilities, and the total capital at the end of the year is 110,000. So 110,000 is the capital, 90,000 is the total of the liabilities. So if we total these two, the capital and the total liabilities, so this is again 200,000. So 200,000 is what is the total of capital and liability. And if you just refer back to the asset total is also 200,000. So that's why we call it as a balance sheet, because both the asset side and the capital and liability side total is same. So 200,000 here in the form of the assets, either it is a current asset or the non-current asset, and also the capital and the liability total is also 200,000. So this 200,000, it means your statement of financial position is correct. So both the asset sides and liability and capital side is equal. So I hope you have understood the basic concepts. In the next lectures or in the next videos, what we will discuss a little bit complex things. For example, this was for the single owner, then for the partnership, and then for the companies, because the format is a little bit different for the companies, because we have to follow the international financial reporting standards or international accounting standards. So that will be prepared, but the basic concept is same. Always the assets will be equal to the capital plus liabilities total. I hope you have understood this thing, but still if you have any doubt, any question, so you can ask me in the comments. Thank you very much.